Hello everyone, this is Ryan Mallory for SharePointer.com. Today is August 21st, 2014. It's been a while since I've done a Google Hangout or a market video of any kind. A lot of that has to do with over the last couple weeks, I have been doing a significant overhaul of my computer system and all my trading equipment. And so my previous system was having a little bit of difficulty with the live streaming. That's when I decided, okay, it's probably good timing to now move beyond some of the old equipment that I had and get a new system. And a new system, I do have basically a quick snapshot of what I'm running. I got an i7 processor, smoking fast, got a really strong motherboard, and about 16 gigs of RAM. I'm working off of a two 1 terabyte hard drives plus a solid state drive, and I know I'm forgetting something here. Oh, a video card. I got an awesome video card specifically for being able to do these hangouts at the best picture and sound, all that good stuff. The video card is a Radeon R9 280X. It's a beast, and I'm working. Before I had a lot of monitors. I had about 8 monitors, and I wanted to downsize the number of monitors I was working off of. I've gone actually down to 3 monitors right now. Actually, I only have 2 monitors I'm using right now, but I have the potential to use about 3. But one of the monitors is a 55-inch 4K Ultra big screen, and it does unbelievable job at being able to essentially segment my screen into different quadrants. So instead of having 8 monitors, I can just have one big screen that's segmented into different quadrants, and it works like a charm. So now I'm ready to get back into it. I miss doing these things, and go ahead and just start right off the bat. The S&P 500, the bears are getting killed. There's really no other way to describe it. I don't know. I mean, there's a lot of concern that what we're seeing right here is maybe a double top that's forming. Nobody knows that. Nobody knows it at all, because we're not going to know until there's a significant failure here at the highs. And right now we're just testing those highs. And if we were to close the market right now, it would be at all-time closing highs. So there's no sign yet of there being a double top of any kind in this market. The potential is there, but potential and reality are 2 separate things. Trade setups have potential, but not all trade setups work out the way you would want them to work out. So it's important to know the difference between the 2. So with that being said, the S&P 500, it's gone up 7 out of the last 9 days. Today, if it's to continue to go up, it'll be up 8 out of the last 10 days. So obviously it can't keep that pace forever. There's going to be a little bit of a blowback. But what we're seeing out of this rally here is very similar to what we saw back in May when we broke out here, and most similar to what we saw here in February, and even when we were selling off here in late July, early August. The textbook or the roadmap to where we were likely going to be seeing unfold in this market was what took place in late January and early February with a significant market bounce. And right now, that is absolutely what we got. I mean, we got the bounce off this trend line here after a heavy sell-off. January was a heavy sell-off. It wasn't as heavy in July as what we saw in January, but nonetheless, the chart patterns were very similar. There was consolidation after the first pushed lower. The only difference is you didn't have this huge blowout at the bottom. You had a little bit of a blowout here, but it wasn't a big one. But afterwards, we rallied substantially. Now, what I like to use on my charts for determining, and this was one of the questions that I got coming into today, was how do I identify the downtrends and everything else? Well, I'm going to skip around on that question some and then try to connect all the pieces together at the end. But this is one of the most incredible tools, I think, that is out there for determining how far a market can really go down. Now, this is the T2108, and there's a lot of moving averages. Don't obsess yourself with the moving averages. It's just a carryover from when I'm looking at stocks like Apple or something like that. The moving averages don't don't disappear. So don't worry about the moving averages. Pay attention to the candles and notice how this July sell-off, it took place back in early July, and underneath the surface on the S&P, while that sell-off was taking place from basically here on over, we were just consolidating on the market, you know, from an index standpoint. But when you look at the individual stocks, which the T2108 does, it shows that stocks are dropping below their 40-day moving average left and right, and we were in the middle of a sell-off that the indices were not showing. Not until 7:31 did we actually get the huge sell-off, and when we did, we got all the way down to 24. Now 24 is pretty significant because, as you can see here, when we've tested it in times past, it typically marks some near-term bottoms. Well, we actually blew past 24 and went all the way down to 18. Now, as a rule of thumb, when we get anywhere between 15 and 18, that is usually the time when you want to start getting long on the market. If you're short, don't be short, because the opportunities to really profit to the short side once the T2108 gets that low, it's not. It's just very limited. There's not a lot of opportunities there. So when that was happening, basically after 7:31, we were already at 24. So I knew that it would only take about another, 6 points to drop from 24 down to 18, and I would want to be getting long at that point. So that when the sell-off on 7:31 happened, I said to myself, it's really too late to get in at this point. The sell-off was pretty much over when 7:31 hit. And so I kept on any of the long positions that I was still in, and then I just started building a steady base of like GPK, which we ended up selling out for like a 5.5% gain this week, and then there was eBay, which we sold for about a 3% gain. Yes, it's up quite a bit today, but you can't predict major market moves on a PayPal spinoff. You just don't know that was coming. But then we also added. When I say we, me and members of the SharePointer Splash Zone, added Facebook and Apple on 8/1, and we're up quite a bit on that. 3% on Apple, 5.7%, or 3% on Facebook, 5.7% on Apple. And then as the month played out, we were adding positions like ESRX, 5.6%, and not all the positions were perfect. We got stopped out of WDC, and we took like a 3% loss there. And then the only time there was really cause for concern in this rally, and I'll pull back the T2108, was this candle right there, right here on. It was 8/12. Now it doesn't look like an overly concerning candle, and I normally wouldn't be that worried by it, but there was a reason for me to start hedging some of the long positions, because at this point we were about 60-70% long, and I wanted to at least have one short position in the portfolio, so I added a short position in AAL. That got stopped out, but overall, I mean, we've hit about 80% of our stocks so far this month. We're on a good trend higher. One of the other questions that I got, and one more thing too on identifying downtrends. This even though it was a sell-off, it wasn't what you would call a substantial downtrend, and we haven't really seen a significant downtrend in quite a while. If you go back to like March, there was more opportunity back in March and early April than there was back here in July, because you had this beautiful double top, you broke through it. But what happened, and it's what happens every time, is the bulls buy the dip, and it keeps the market marching higher. So it always kills the bear candle patterns and rewards the bullish candle patterns. But here, what would have happened if, let's say, instead of this candle here, we got a red candle and it moved back and made new lows? Then you start having a series of lower highs and higher lows. This being the lower high and this being the lower low, and then if we would have sold off right here and broken these lows, then you would have had a new lower low. So you would have actually had a channel there that you could have traded in, and the potential for a new downtrend to be in place. But time and again, we haven't seen that play out. And once again, this could have been the opportunity. This candle here could have been the opportunity for a lower high in the market, and then the next day we got that candle. Where that looked like possibly the market was going to start selling off. There was some news that was popping back up in the media that was causing some market angst. But Nonetheless, that didn't happen, but had it done so and broken this low here, then you would have had the lower lows, and you would have definitely had a channel there that you could have traded on. So when I got short on 812 with AAL, that was really just trying to start positioning myself for a move down. I actually hope that I got stopped out of AAL because we were long by it we were to the long side, and if I got stopped out, that likely meant that the other 6 positions were doing great, which they were, and but nonetheless, I had to caution myself that this could be a potential stop on this dead cat bounce here. Well, we find out later that this wasn't a dead cat bounce. This is a push to new highs. This candle here never bothered me one bit, and since then we've just been chugging right along. So the bulls or the bears are getting squeezed on a daily basis, and I suspect too that if we close at all-time highs, we may see a little bit of more squeeze, because I think there's probably a lot of bears out there that are drawing the line in the sand with these highs, saying that, okay, if we don't get the double top, then I'm out. So if they don't get the double top, we break through it, they're going to start covering their positions. So right now we're trading at intraday, all-time intraday highs. So as we get closer to the end of the day, we may see some of the shorts start covering their positions in anticipation of the double top 3 being blown through, and so forth. How do I look for setups? It's pretty easy. You just look here at the general requirements. I scan sometimes anywhere between 300 and 500 stocks a day, and I don't really scan in a way that I don't really try to only get like 20 or 30 stocks in my scans. I want a lot of stocks in my scans. I want to go through 300 to 500 stock charts and figure out which ones are the best setups. So what I do is I scan out the stocks that I know I'm not going to trade under any circumstance. I'm probably not going to trade a lot of stocks that are under $5. Okay, so we can get those out of the picture. I think that's a crazy game to play. I think it's really playing like Russian roulette. When you get under $5, the stocks are very volatile in movement. The risk is very hard to contain, and there's just too many variables working against you. So I get all those out. I also don't want stocks that are low volume. So I want stocks that are usually trading over 1 million shares at least. So anything less than that, I'm going to scan out. And that's pretty much. And the other thing too is I like to find stocks that do have a history of moving, like Netflix or Tesla, or stocks that make moves. They're not going to be like Walmart and just move in a 1% range over the course of a 5-year period, because even if you have a great setup, you're not going to make money off of it. So ideally, I want the tight setups where you can keep the risk tight, but the stock has a track record of being a high beta stock. So usually I'm looking for stocks that have betas over 1, preferably over 1.5. So I know that there's that volatility with the stock, but I can manage the risk in a good way. So that is how I scan. It's really simple. I don't look for magic formulas really in anything, and when it comes to scanning, I think the more stocks the better. Just get rid of the ones that I have no desire to trade whatsoever, so I'm not wasting my time with them. And then when it comes to shorting stocks in a down market, am I looking to break support or short the bounces? And really, the answer to that is both. Do I wait for them to get below the 200-day moving average? No, I don't have any problem shorting them above the 200-day moving average. A lot of times when they get below the 200-day moving average, there is a tendency for them to bounce really hard if they do in fact bounce. So below the 200-day average, I'll short them below it, but it's not necessarily a competitive edge when it comes to shorting. So breaking support in the early going, that if I was to have been short on the market back on 7/31, I would have been looking for stocks that were breaking support. Something like BBY is a good example of that. Not lately, but you can see here, though, that in late July, this stock was showing signs of breaking down. It never did, but had it gotten below like that 28.90 level, that would have been a good shorting opportunity. Instead, it did bounce. But now, when we get to the point of the rally where the first leg down has already been made and we're on the dead cat bounce, then I'm looking to short the bounces. So It depends on what stage of the sell-off that you're in. If the market's bouncing, you're trying to short as the market or as the stocks go back into previous resistance. If it's right at the beginning of a sell-off, then you're looking to short support or breaking the support that's breaking. All right, let's just look at a couple of charts here real quick. I got it out of STLD yesterday. Some people were wondering why did I do that, and I mean it's not breaking down or anything. It broke down a little bit early on, but let's just throw some Bollinger Bands on there, and so you can see what I'm talking about. It was outside and it started breaking down. Now, if you look at the history of the stock, when it starts putting in that first red candle outside the upper Bollinger Band, it does tend to see a retreat in price. So, you know, you had a 2-day pop here, just like you had a 2-day pop here, and then the consolidation. Then that first red candle, which started bringing on the bears. So I got that first red candle yesterday. It was going to allow for a graceful exit out of the play. We got about 5+%. Let's see, 5.5% on the trade, which is great. So I moved on. I mean, you can see here it was trading out a little bit outside the upper Bollinger Band. Got that first red candle, not so nice. Same again here. So I mean, you can see all throughout its history where when it gets it going on the outside of the Bollinger Bands, and that first red candle is never a good sign for the stock. So I'm going to use the past history as a guide on this one and go ahead and take my gains. It could still keep moving up and just sort of defy what the track record that it has exhibited in the past, and keep moving higher. And if it does, then tip your hat to the stock and be done with it. So that is STLD. We're in Apple right now, and AAPL has been a great trade so far. And you can see it's just hugging this 5-day moving average. A lot of separation between it and the 10-day moving average. And for now, you can see I'm going to get rid of this Bollinger Bands in a second, but you can see how it's just going right up the inside of the upper Bollinger Band, which is usually a very healthy sign for a stock on the rise. So I don't see any reason to get rid of the stock yet. I think it's doing great. Now you look at its counterpart, Facebook. We're up about 3% on the stock, but it is getting a little bit frustrating holding on to this play because it just doesn't seem like it's doing much of anything yet. But the potential is still there. I mean, you can see you could say that it's like a mini bull flag or something, and that it's ready to ready to push higher there. So that's a stock that's still worth keeping, even though it's just not showing the gumption that you would like for it to have right out of the gate. So one question I just got here, what about the money flow in your scans? I don't really care too much about the money flow. There are some stocks or some screens that show that. The one that I really like is, I don't know, let's see, volume. It's called Volume Buzz on the TC2000. They don't have it on this, but it honestly, what the Volume Buzz shows is it does show that money inflow into the individual stocks and which ones are showing a lot more volume than what it's historically normal for that stock. Not so much, Volume Buzz being like, okay, is it trading above or below the 50-day moving average for volume? Now this one's really looking at the Volume Buzz from different time frames in the past, and TC2000 or Warden, and I don't get compensated or anything by talking about them at all. I do like their products a lot, and so if you like them as well, they're definitely worth the price that you pay for them. A little bit on the pricey side, but it's still a very reliable and solid product. But the Volume Buzz, let's see here if I can add the column. I'm trying to remember where it is at. Here you go, today's Volume Buzz. And I'll scoot this thing out here a little bit so you can see what I'm talking about. And so one way, if you're wanting to do like a money scan, like a money inflows, like you can look at stocks like, okay, IRF, obviously there's a lot of money flowing into it. So like the top 5 or 6 stocks are usually they're obvious, because they're gapping up, 10, 15, 20%. But then you get something like ING, okay, there might be some opportunity there. I don't think that's really a good trade setup, but you can see that like HTZ, I think there was some news about some big money going into HTZ yesterday. You have about 362% volume buzz on it. That means there is a lot of money flowing in, and it works for stocks dropping and for stocks rising. So if the stock's falling and it's got a high buzz, then it means that a lot of people are selling out of it. So like HPQ, it's got a 325, but where I really like these stocks at a lot are like BITA. And you got to sort of do this in conjunction with the candles, but you can see here where on the 5-minute chart where the buyers have been stepping it up and trying to get back in. And while it's still in the negative territory, you can see where the people buying it are doing it pretty aggressively because it has 136% volume buzz. So anything over 0 is good. I really think that if you can get a setup that's like over 50% volume buzz, that's usually pretty good. Staples, I think this is seriously one of the most problematic stocks to trade out there. It just does not follow technical analysis whatsoever. But a lot of people are getting out of this stock. It's got 100% volume buzz. It's dropping, so that means there's a lot of outflow in the stock. This isn't just a typical pullback. This is something very hard and concrete. Bank of America, it's up today. You're seeing a lot of that with financials in general. So a lot of money going into it. So it's also a good way to see like sector rotations too if you continue to see high volume buzz in a lot of the same industries. Another question that I got: how do I get the T2108 chart? It's not on Thinkorswim. It is on the Warden charts, the stock TC2000. It's also on Stock Finder, which is one of their more outdated platforms. And then it's also on, I've heard rumors that it's on freestockcharts.com, which is what they also own. So you can check it out there. It might be free for you to check out. If not, I'm always in the splash zone posting it, particularly the T2108. It's really helpful when there's market downturns. I sort of ignore it a lot during the upturns because it can stay like at 70 to 80% for a long, long time, but on the downturns, it hates staying down below 20 for very long. So, all right, couple more charts here, and I've been talking for a while already, but I'm going to keep this going for a few more minutes at least. ETFC was a trade that we got into a couple days ago, namely yesterday, but it's off to a good start. This was really what was key for me here. You see this 2170. This was a strong resistance level. You can see it struggled to break it right here, and it struggled to break it again here on August 11th. And then, again, it decided to retest it on August 18th. So what you have here is a nice little basing pattern, short-term basing pattern. It's not a long-term one, but when it finally broke out of it, then you're starting to see this upward climb here that, okay, maybe it takes it into the 23s here and we can make some decent coin off of the stock. And it's hugging that, the moving average is pretty good, so it does show that there's a lot of strength there, and, up a solid 1.5% today. And ETFC is also probably benefiting off of the fact that there is money going into the financials today too. So a good setup, good industry strength means a good return for your money. DDD was a stock I was asked about, playing off the bottom. I really think that this needs to get back above 50 before you give. Let's say it gets back above the highs from 731. So if it can get above like 51.88, I think there's a lot of potential there. But right now you can see here back on 730, and then again today that 20-day moving average continues to weigh on it. Also weighed DDD down on 718. So there's a history of that 20-day moving average being very problematic for DDD. So until it can break that, and until it can and I said the highs for 731, I really meant the closing highs. So let's say 50.13. So if it gets like the 50.15, I think there's a good opportunity to get long on DDD. But until then, I'd hold off. So you got about a 2% gap between where it's at right now and where it needs to be in order to consider it as a long setup. Let's look at some setups here too. I'm gonna flip the page of my book here, and I'll go through these pretty quick. But STT is one that I really like right now. It's only up 0.5%, so it's not as bullish today as some of the other stocks that are out there in the financial sector, but the setup is beautiful. A lot like ETFC actually, but you can keep the risk very tight, and this is one that I might get in and then close out another position that we're up on that seems like it might be stalling out. But STT, definitely keep it high on your watch list. it is a solid trade setup. And then you got one that a user or a member of the Splash Zone submitted today, KOG. It's a nice bullish flag here. And bullish flag, but what I mean by that is, you got a good rally in the stock, and it almost goes up like a flagpole, right? And then it starts creating like a flag-like pattern here, and you can see this flag is where it goes slightly down, but more sideways than slightly down, and it looks like a flag. So you got the pole going up, and then you got the flag going to the side and slightly down, and then it breaks out of that flag, and that's where you want to get long at. So right now at 1523, it's holding its own pretty good, and I think if you're going to play it, you could probably do so with like a stop at probably like 1480, 1479 or so, and it provides a good risk for the amount of reward that can be made on the stock. And WFP, these are just sums that I had found today so far. WFP's pulled back a little bit, but still looks pretty strong. Nice base, similar to STT and ETFC. Oil has started to see some more renewed strength as well, and good setup there. RRD, not ready yet for prime time, but you can see this is just consolidating perfectly from side to side. And let me put a box around this. So this is a box consolidation play here. And this has been made famous by a lot of traders over the years, and when it breaks out of that box, that's where you really see it push higher. The 200-day moving average could be a little bit of a problem for it, but I would probably still get in, as long as once it crosses like 1754, it'd probably be where I'd want to get long at. You can maybe do it a little bit earlier and just take your chances with the 50-day moving average, because if you got in at like say 1738, you could keep the risk extremely tight, and then if it fails at 1753, 54 at the 200-day moving average, you can take your profits and move on. And then Ctxs is a trade that we got into today, and so far it's off to a really good start. And basically what I saw here was a lot of consolidation at the highs. It did a good job of weathering the storm that 731 sell-off brought, and didn't really tank like a lot of stocks that we saw. And then today it's breaking out. You can see here that after those highs from July 30th, and then again on multiple occasions on the rebound on 8/15, and ever since up until yesterday, it struggled to break through it. Today it's breaking through, and there should generate some buying interest from the bulls to continue to push the stock higher, maybe get up into like the mid 70s or so before we have to take our gains on it. So that was a lot. We covered a lot. If you guys have any questions, I'm always in the Splash Zone each and every day, fielding your questions, answering them, it's the place to be. I enjoy it thoroughly. It's something I look forward to every day, being with you guys. And if you have any questions in there, always feel free to ask me. I'm always, watching everything that's being said, and also interjecting my own trade setups, giving out real-time trade alerts via text, email, and also posting them in the chat room. And it's been a good year so far. I mean, a solid year. And if you are not subscribed to the Share Splinter Splash Zone, I would highly recommend you at least try the 7-day average. If you don't like it, you can get out, and no harm there. But at least try it. I think you'll come to find that, like a lot of other members, that it's a great place to call your trading home. So that said, let's get through today, the rest of today, get through tomorrow, keep managing that risk, and then we got the weekend ahead of us, and then after that we got the Labor Day holiday weekend, and so some good times before you know it, Christmas will be here. So y'all take care, and if I don't get to talk to some of you guys between now and then, have a great weekend, and until then, we'll be trading away in the Splash Zone. God bless you all.